Susu is an ancient financial system that dates back centuries, long before banks as we know them today existed. It's a practice rooted deeply in trust, community, and mutual support. At its core, it's about pooling resources together, where a group of people come together to contribute a fixed amount of money regularly, with each member taking sums receiving the lump sum. While this might sound familiar to modern-day saving schemes, what makes Susu really truly unique is how it laid the foundation for financial independence and prosperity for many Africans. Long before Western financial systems had any foothold on the continent, let's break down how this system made Africans rich. First, the system of Susu lies in its simplicity. Think of it as a community-led savings plan. People contribute small, regular amounts of money, often weekly or monthly, in a communal pot. Then, at each cycle, one person receives the entire amount. The cycle continues, with each person getting their turn. Now, while it might seem like just a saving plan, the power of Susu comes from its structure. Unlike banks, there's no interest rate or middleman taking a cut, no paperwork, and no waiting for months to get a loan approved. It's fast, it's personal, and it's a system built on trust. Imagine being a farmer who needs to buy new tools or expand their land, but you don't have access to traditional loans. Through Susu, you can pool your money with others in your community. And when your turn comes, you have enough capital to invest in your farm. This is just one example. The same system can be used for almost any purpose. Starting a business, buying livestock, paying for education, or covering the cost of weddings. What's even more remarkable is that the practice wasn't restricted to a specific part of Africa. It was practiced across the continent in various forms, from the Akan people in West Africa to the Zulu in Southern Africa. The beauty of Susu is that it's not just about individual wealth. It's about community building. Each person benefits when the others in the group succeed, which fosters a sense of solidarity and cooperation. In communities where access to banks and formal financial services were so limited or non-existent, Susu became the backbone of economic Africa. It allowed people to create wealth from the ground up based on relationships and mutual trust, not credit scores or collateral. The second factor that made Susu successful was its accessibility. While other banks were often out of reach for the majority of Africans, especially in rural areas, Susu was available to anyone with a network of people who were willing to participate. You didn't need a credit history. You didn't need a permanent address or formal identification. All you needed was a group of people committed to saving and a strong understanding of how the system worked. This accessibility helped lift many out of poverty by giving them the capital to pursue ventures that would have been otherwise impossible. It also made people more financially literate. Participating in a Susu scheme taught people how to manage money, understand cash flow, and make long-term plans for growth, all without formal schooling or financial institutions. But there is something even more powerful about the way Susu was structured. It was adaptive. There were no fixed rules. Every Susu system was unique to the community that created it. The amount of money contributed, the length of the cycle, and how the pot was distributed could all be adjusted depending on the needs of the group. Some communities made sure that everyone in the group took their turn at receiving the lump sum as fairly as possible, while others may have allocated it based on urgent need on the business opportunities that arose, the flexibility allowed the system to thrive in different environments, adjusting to the varying needs of people in different parts of Africa. Take the example of a market trader in Nigeria. Her business might need a large influx of cash to stock up on goods for a seasonal festival. She can't wait for a loan to come through from a formal bank, so she joins a Susu group. When it's her turn to receive the collective contribution, she can immediately purchase the goods, sell them, and then pay back the group over time, without any added interest or bureaucracy. This system doesn't just keep her afloat, it allows her to scale her business quickly and efficiently. And when others in her group need help, they can turn to the same system to go ahead. But what about the risk? After all, putting your money in someone else's hands sounds like it could lead to betrayal or theft. This is where the true magic of Susu comes in: trust. The members of the group weren't anonymous strangers, they were part of a community. And in traditional African societies, relationships were everything. If someone didn't follow through on their commitment, the entire community would feel the ripple effect. This was just about money and other things. It was about maintaining honor, reputation, and integrity. In a world without formal contracts or legal curse, your world was your bond, and failure to uphold your part could result in public shame, social isolation, or being ostracized from the community. Trust, therefore, became a foundation of success in Susu. And the system worked in Ghana. For example, such was deeply embedded in the way people did business. It was so successful that even today, people practice more than various versions of it. Adapting it to the digital world, the system was so effective that, in many parts of Africa, it made people financially independent, long before colonial powers imposed European banking systems. Wealth didn't just flow into the hands of people. Building the foundation of thriving markets, building trade routes, and variant communities across the continent was part of it. So how did Susu make Africans rich? It wasn't about fancy financial products or wealth management tools. It was about pooling resources, building on relationships, and putting trust at the center of wealth creation. It empowered individuals and communities to break free from the limitations of financial institutions and thrive without needing a middleman. By operating outside the formal banking system, Susu was able to generate wealth where banks had failed. And today, the echoes of this practice still reverberate through African economies, reminding us that wealth creation doesn't always have to come with a suit and tie. Sometimes it's just about coming together to build something greater than the sum of its parts. If you enjoyed this video and you feel you've learned something about finance, make sure you subscribe to this channel for more African financial content.